Every professional boxer knows something most people don't. To land a punch, you have to get close enough to get hit. There's no other way. You can't throw from across the ring where it's safe. The moment you step forward, you're exposed. You're going to take punches. Not maybe, for sure. The best boxers in history weren't the ones who never got hit. That guy doesn't exist. The best were the ones who got hit and kept moving forward. They understood the deal. Getting punched is the price of throwing punches. You don't get one without the other. Now think about what happens when you take a loss. Your chest gets tight, your face gets hot. You feel that wave of frustration rising up. Part of you wants to slam your desk. Part of you wants to jump right back in and make it back. Your mind starts racing. Why did I take that trade? I knew I shouldn't have entered there. The market is out to get me. I always lose at the worst time. You're not thinking straight anymore, you're reacting. And that little voice in your head is already planning the revenge trade that's going to make everything worse. Sound familiar? That feeling right there is why most people fail at this. Not because they don't know how to read a chart, not because their strategy is bad, because they can't handle getting hit. They take one loss and they fall apart. They take 2 losses and they abandon their whole plan. They take 3 losses and they're either revenge trading like a maniac or they're too scared to click the button on the next valid setup. Both roads lead to the same place, a blown account and a lot of regret. Here's the thing nobody told you when you started. Losing is part of winning. You can't have winning trades without losing trades. They come together. Package deal. The best traders in the world lose all the time. 40% of their trades, sometimes 50%. They still make money because their winners are bigger than their losers. But they still lose, regularly, every single week. The difference is they don't fall apart when it happens. They expect it. They planned for it. They take the hit and keep moving. Think about how a casino operates. Every single night, some gamblers walk out winners. The casino literally hands them cash. Losing money is built into the business model. But the casino owner doesn't panic. He doesn't shut down the tables because someone hit blackjack. He doesn't change his entire operation because one guy got lucky on roulette. Why? Because he understands the math. Over thousands of hands, over thousands of spins, the odds favor the house. Some nights the casino loses, some weeks the casino loses, but over months and years, the casino always wins. The losses aren't a problem. They're expected. They're factored into the business plan. The casino owner sleeps fine knowing he gave away money tonight because he knows next week, next month, next quarter, the math works in his favor. That's exactly how you need to think about your trading. You're the casino. Your edge is your house advantage. Some trades will lose, some days will lose. But if your edge is real and you execute it consistently over hundreds of trades, the math works in your favor. The problem is you're acting like a gambler instead of the house. You're panicking over single hands instead of trusting the long game. But you, what do? You take a loss and you act like something went wrong, like you made a mistake, like a good trader wouldn't have lost that trade. So you start doubting yourself. You start changing your strategy. You start looking for a new indicator or a new system that wins more often. You think the problem is your method, but the problem is in your head. The problem is you think losing means you're doing something wrong, and that belief is destroying you. Your losing trades are not your enemy. Your losing trades are the cost of doing business. Every business has costs. A restaurant buys food knowing some will go bad. The restaurant only fails when the waste costs more than the sales bring in. Trading is the same. Your losses are just an expense. The cost of pulling money from the market. Your job isn't to stop losing. Your job is to make sure your wins cover your losses and leave profit behind. That's the whole game. But your brain doesn't see it that way. When you're in a losing trade, your brain thinks you're in danger. Heart beats faster, hands get shaky, thoughts start spinning, your survival instincts kick in. Your brain screams, do something, fix this, stop the pain. So you move your stop, or you close early, or you add to a loser hoping it comes back, or you take the loss and immediately enter another trade trying to make it back. All of these feel like the right thing to do in the moment. All of them are wrong. All of them make things worse. So how do you fix this? It starts before you enter. Before you click the button, you have to be okay with losing. For real, not pretend okay, actually okay. Look at your stop loss. Say out loud, I'm fine losing this amount. If you can't say it honestly, you're trading too big. Size down. Make the loss small enough that it doesn't trigger your panic response. A loss you can handle is a loss that won't hijack your brain. Next, stop grading yourself on every trade. This is where most traders get it completely wrong. They judge themselves trade by trade, one loss, and they feel like a failure. But that's the wrong scoreboard. There are 3 levels you need to understand: trade loss, day loss, week loss. They don't mean the same thing. A losing trade means nothing, absolutely nothing. It's one data point, noise. You could do everything right and still lose. That's just how probability works. Stop letting one trade decide how you feel about yourself. A losing day is also okay. You can lose today and still be a profitable trader. Some days, the market doesn't give you good setups. Some days, your edge just doesn't show up. Some days, you do everything right and still end red. That's normal. The pros have losing days all the time. They don't panic, they close the charts and come back tomorrow. A losing week can happen too. And it doesn't mean you're failing. It means variance is doing what variance does. You could have a bad week and still end the month green. You could have a bad month and still end the quarter green. The goal isn't to win every trade. The goal isn't even to win every day. The goal is to end the week green, end the month green. That's the scoreboard that matters. When you zoom out like this, everything changes. One loss doesn't hurt so much because you know you have more trades coming. One red day doesn't break you because you know the week isn't over. You stop reacting to every little punch and start focusing on winning the fight. That's how professionals think. They know some rounds will go against them. They're not trying to win every round. They're trying to win the match. Change what a loss means to you. Right now, a loss feels like proof that you're bad at this, proof that you're failing, proof that you should quit. That's the wrong meaning. A loss where you followed your rules is a win. You did your job. You executed your plan. The outcome wasn't up to you. You can't control the market. You can only control yourself. Every loss you take with discipline moves you forward. Every loss you take with emotion moves you backward. The money gone is the same. The direction you go is opposite. Pick discipline. Accept the hit. Clear your head. Take the next trade like a professional. That's how winners operate. That's the only way you'll survive long enough to become one. The punches are coming. That's not a question. The only question is, will you take them like a champion and keep fighting? Or will you let them break you right before your big run was about to start?